So here's a question which every visitor who comes to my insurance club to buy term insurance asks. What is the claim settlement ratio of an insurance company and why is it important? Let's understand the simple formula for calculating the claim settlement ratio. It's basically the number of claims which an insurance company has made in a year divided by the number of claims that it has received in a year. So please note, it is the count of claims which is taken into consideration and not the amount of claims. Second, it is individual claims which are considered for this case and not the overall claims which includes the group business also. This ratio considers only death claims which have been received and made by the insurance company, and it's also usually calculated for one financial year, and this is usually reported by the insurance regulator in its annual report for every insurance company. Just for greater clarity, let's work this out with the help of an example. Let's take the case of ICICI Prudential for the financial year 2015-16. The count of individual death claims received in the year is 11,034. The count of individual death claims paid by ICICI Prudential in the year is 10,615. So for the year 2015-16, the claim settlement ratio for ICICI Prudential is 10,615 divided by 11,034, which is 96.2%. This is a good claim settlement ratio for an insurance company. So the balance of the claims are either rejected or are still impending at various stages of clearance. But majority have actually been rejected in most cases. While the regulator publishes this information once a year, 6 months after the financial year is ended, you might find insurance companies actually regularly updating it on their website. So it's pretty accurate if you find a particular claim settlement ratio being claimed by an insurance company on their website. So this number is a very important number for a customer. It gives you a very good sense of how effective the insurance company's underwriting and claims processing units are. After all, the most important piece when you're buying term insurance is the guarantee that your claim will get honored and your nominee will get the sum assured. So very important perspective while buying term insurance for yourself. So here's my take. Any company greater than 90% is good. The higher the better. Also, please note that generally new insurance companies will have a lower claim settlement ratio in the initial years, largely because the business volumes are low in the initial years, and you might find even slight reductions in the underwriting quality in the initial few years because you want to do greater numbers and you're in a hurry to grow more business. But as a thumb rule, if in 10 years an insurance company hasn't reached 90%, I would be very careful about it. That's what we had to share on the claims ratio piece. If there are any questions, we would be happy to answer them and solve your queries. Thank you.